What is the one trade that you have heard about in the public media over the last 12 months that's been pretty much unanimous? Well, if you've been following the stock market, it's been unanimous that every institutional analyst, every institutional investor out there has been saying buy the banking stocks, buy the financial sector. Why? Well, because it's clear. It was at that point clear to them, or so they said in every media channel out there. Buy bank stocks. The rates, the interest rates are going higher. The job growth is undeniable. Buy bank stocks. They are so undervalued. Now, the entire year they've been saying this. And every time the banking stocks would drop, guess what they would say? Oh, buy bank stocks. They're so undervalued. They're such a great value. But instead of listening to them, the easy solution was what? Check out the charts. See, the charts don't lie. So while they were saying this, what were they actually doing? Well, their actions were clearly portrayed in the stock charts. So while they were telling the public to buy bank stocks, this is what they were actually doing. Does this stock look like they were buying banking stocks? This is a stock of Goldman Sachs. Actually, how many individual investors do you think trade stocks that are priced around $240? Considering that the volume of Goldman Sachs is 2.1 million shares, I don't think there's enough individual investors in this country that would create a volume of over 2 million shares exchanging hands literally every day. Now, in some instances, we're talking about a volume of 10 million, 5 million shares a day. So clearly, it would have to be institutional investors that would have to be doing most of the buying and selling in these higher priced stocks. We're not talking about a stock that's staying $20, right? So as they're saying, buy banking stocks, what were they doing? They were selling the heck out of banking stocks. You want another example? Here it is. This one is not even high price. Bank of America. They were saying, oh, Bank of America is one of the best banking stocks. It's got some unbelievable prospects. Buy. What were they doing? Does this look like they were buying? And guess what? Yesterday, I actually was watching something. They were like, oh man, well, now the banking stocks have fallen so far that it's almost a crime not to buy them. And the banking stocks drop even more today. Guys, this is pure insanity. You cannot be listening to what the people are telling you out there in the public media. Learn the charts, learn how to use them, okay? So you wouldn't be a victim of all these people out there that are telling you one thing while in reality their actions are exactly the opposite. So does it look like they were buying Bank of America stock? Clearly not based off this chart. You want another example? BlackRock. That's a nice financial stock. Look at this. Jesus Christ. From $520 to $380. Does this look like they were buying this one? Clearly not the case. Now let me ask you this. What did they tell you about Bitcoin last December? What were they saying? Anytime you turn on the news. Oh, Bitcoin to 500,000. Bitcoin to the million. Bitcoin to the moon. What the hell is this? Bitcoin drops from 20,500 to 3,000? Now, I know our view on Bitcoin was not popular, but one of the first videos we posted on this channel was saying when Bitcoin was around 17,000, 18,000, we said, hey, Bitcoin 12 months from now will be $3,000. It actually dropped earlier today to 3130. How do we know this? It's by eliminating the public opinion, by not listening to what the majority has to say, and by studying the chart. So apparently, when they were saying Bitcoin was going to the moon, in their view, the moon was hidden underground. And what are they telling you now? Santa Claus is coming to town. Get ready. Buy the dip. The stocks are about to go way, way higher. Let me ask you this. Does this look like there is a lot of buying going on? This is NASDAQ, which combines most of the technology stocks. Does this look like a lot of buying? This looks like a death cross to me, which is impossible to form unless a shitload of people are selling. Okay, so look at all these red bars right here. Does this look like buying? There's no buying. There's clearly people getting the hell out of this market is what's going on. But what are they telling you? Santa Claus coming to town. Let me ask you this. This is considered to be one of the top stocks in the history of the stock market, period. Amazon, right? Every time you turn on the media, what do they tell you? Oh, man, that's one of the best stocks ever. Buy, buy, buy. Buy every dip. Okay, so since we've recommended shorting Amazon was trading around these levels, 2,000, 2,050, okay, it has dropped all the way to $1,500 a few times. So 3 times it makes the dip, and it's still not back to the levels of at least 1,800 or 1,900. Not even talking about the levels it was trading just a couple of months ago of 2,000, 2,050. So where's the logic here? They keep telling you buy the dip while they're doing what? What are they doing? Does this look like they're buying? Well, clearly it looks like every time the stock pops to about 1,700, close to 1,800, they're selling and they're continuing to sell it. And as long as that happens, there's no way the stock is going to move back up to this level of 2,000, not even 1,900. And what does this look like? This looks like a death cross waiting to happen when the blue line on Amazon is just about to cross the orange line. Surprise, surprise. Amazon in the last few years have never traded under its orange line for this long. This is not a bullish chart by no means. Based on our predictions, we think Amazon can easily drop to a level of 1,350, possibly 1,100 would be the next stop. 1,350 pause, 1,100 next price target on Amazon over the course of the next 60 days. So the idea is this. If the institutional investors telling you to buy the stock and they perceive every dip in Amazon to be such a great value, and now it has dipped 3 times in a row, what, are they not apparently thinking themselves that a discount of 20-30% of recent price levels in Amazon, apparently this is not the dip since they're not buying. They're telling you to buy the dip, but in reality they keep selling at these lower levels when the stock is already down 20-30%. So I guess listen between the lines. What they're really saying is this is not the dip. The stock is going to go significantly lower before it goes higher because clearly I don't see them buying the dip. Do you? People wake up. The news from China was good, right? The market was rallying 6 days in a row in expectation of great news with China. So what has happened during the big meeting, the greatest, biggest trade deal ever? Are you freaking kidding me? So hold on a second. Last December, we had 0 tariffs. This December, after they did the meeting, they reaffirmed the 10% tariff. Okay, so, I mean, I'm not that bright, but last year we had 0 tariffs. This year we have 10% tariffs. And that's supposed to be the good news? The market's supposed to go higher on this news? Now, the entire American population is paying 10% higher on pretty much 90% of the goods, and that's supposed to be good news. Wow. And the market did manage to rally, but for those of you that trade with us closely, you know that we recommended to short every bounce that have been taking place in the markets and load up on VIX calls. Now, here's the thing. Why did the market go higher? Well, sometimes the market goes higher for the wrong reason. See, the worst outcome of the meeting in China could have been the fact that the tariffs could have gone from 10% to 25%. Well, that has not taken place yet. And so the market has actually rallied for the lack of further bad news, which by itself, if you think about it, it's ridiculous and clearly not sustainable. The market's supposed to go higher because the production is going higher, the consumption is going higher, the economy is growing, the people are spending the money that they earn, not necessarily the money that they borrow that they have to pay back. So if you take a closer look at everything, the people are maxed out. Okay, everybody that could have taken a home equity loan while the home prices have gone higher, they have taken one out. Everybody that could have gotten a credit card, they could have gotten it, and pretty sure they put it to good use and maxed the hell out of it. Okay, people that could have gone and gotten a student loan, guess what? They have gotten it already. United States consumer is maxed out, and now on top of everything, it's being hit with higher prices because of the tariffs. Look, unemployment is at the lowest in the last 40 years. So here's the question. Why the Fed all of a sudden is worried about raising interest rates by a measly quarter point? I mean, are you serious? Isn't that like saying that we have been lying to you about the economy for the last few years? It actually is incredibly fragile despite of everything that we have been telling you. Guys, this is something to think about because this is not a joke. This is not the dip you want to buy. So what is the solution? Often I'm being asked the question, well, why do you think the market will drop? Why do you think it'll drop? I mean, it hasn't dropped in 10 years. Why do you think it's going to drop now? I think a better question to ask at this point is to ask, why should the market go higher? Because clearly if the market is not going to go higher, the only two other outcomes, it could trend sideways or it can drop. Based off some of the few charts that I just showed you, it looks to us like there's a lot of selling going on rather than buying. So the question is, what could reverse this type of situation that we're observing in the markets now, where there's a lot more sellers rather than buyers? Here's the main problem. The market has failed to go higher for the entire year of 2018 when the companies were announcing record earnings. Now, earnings growth typically is what propels stock prices significantly higher. So if stocks failed to go higher on the best earnings in the history of the United States, how do you think they will go higher on mediocre earnings that are projected for the 2019? With that being said, here's the solution. Wake up, my fellow trader. Wake up, my fellow options trader. And wake up anyone out there that's listening to this video that at this point starts to wonder, how do I make money when stocks fall? You may be thinking, God, if I would have just listened to Leonardo's video in December last year, I would have not bought Bitcoin. I would have actually shorted Bitcoin, and I would have caught the huge drop from 18,000 to 3,100 on Bitcoin today. And I would have made a bunch of money. So the truth is, the stock market is about to present you with such an opportunity. And the only thing you need to know is the charts. Eliminate all the noise out there that they're trying to feed you on this public media. Focus on the charts and you will get much better results. So wake up and learn how to short stocks. The best strategy we can share with you, how to short the markets in stocks by utilizing put options. Learn how to profit when stock market drops. Learn how to profit when stocks drop. Learn how to profit when cryptocurrencies drop. Learn how to profit when commodities drop. It is actually a lot easier, especially in the environment like we're fixing to go through in the next couple of years. This is going to be a highly valuable skill that you can acquire, and you don't have to go through 2 years, 4 years, 10 years of college to obtain this valuable skill. You can do this now by clicking the links below this video and getting your charts course, which is going to help you with building the foundation of identifying how to short stocks. It's going to show you the divergences that you will be able to learn and use on your own to help you identify the best stocks and the best shorting opportunities out there. Guys, thanks for watching. Thanks for tuning in. Take the next step. Make your next year your most profitable year ever, but take action now. Don't be the guy that was buying Bitcoin for $18,000 last December. I'll catch you guys in the next video. If you're new to trading and you're trying to figure out how to get started, how to get going, I simply schedule a 20-minute coaching session. Click the link below. It's absolutely free. You can ask any questions about trading stocks, trading options. You can ask questions about any specific individual stocks, any commodities, any cryptocurrency. You can ask any questions that has to do with trading.